All right, let's get started. My name is Shane Handy. I'm the founder of The Rational Trader. I'd like to thank you for joining me today. We're going to talk about the framework that you need to have in place to be successful, the blueprint, right? The plan that encompasses not just really what you think about when you think about trading, which is technical analysis, but there are other aspects that you need to have in place if you want to be successful. And a lot of times what will happen is if you don't understand these other things that you need to be focused on, you'll try to solve problems in those areas with technical solutions, and this is where you just run into problems. So we're going to start with this week's trades. There's a couple of days I'm going to grab and just show you the trades I took this week. I am a trader. I trade live with real money in real time every day. I don't just create systems and sell them and hope it works out for you. I actually trade every day, and I trade what I teach. All right. Then we're going to talk about these aspects of trading as a business that you need to have in place. So market biology, what makes trading as a business somewhat unique, and then technical analysis. And then we're going to go and look at specifically on the trades I showed you at the beginning, what was I seeing technically? What was the technical reason for taking that trade? All right, and then we'll wrap up from there. All right. The question that comes in always is this being recorded? Yes, it is, and a link will be sent out in a few hours after we're done, after the video renders it. So let's get started. This is the NASDAQ. Let's get oriented here. You're looking at the NASDAQ. This is Thursday, and this is a 10-tick range bar chart. All right, so each bar is 10 ticks high, and I'm on the West Coast, so this is starting at 6:30 in the morning. You got a vertical line right here. This is ES open, stock market open. All right. There's a gray background there that represents a blackout period for me. I won't take trades in the first 5 minutes. All right, and I just have the software draw this for me automatically. You got some horizontal lines here that represent the opening price. That's the orange line. And then the previous day's close. And then also, let's see, the overnight high. Excuse me. Yesterday's high, and then the overnight low. And somewhere is the previous day's low. Excuse me. The previous day's low. The NASDAQ's been very, very volatile lately, so I've had to make some adjustments in what I'm doing. So we can talk about that as well. As we came into the market here, we were up just a ridiculous amount here. The difference between the low and the overnight high were, that's almost 100 points. This is a crazy move overnight. And so coming into the day, I was expecting volatility, and I had made a plan over the weekend to deal with the volatility. We'll touch on that. And so what I did is I shorted it right here, okay, right at that circle. And in fact, the signal to short is right there. It's that little purple triangle pointing down. It's a wave volume signal indicating that there doesn't seem to be any more interest going up. I call it the no interest signal. And what I did is I went in on the break. Now, there's a couple other things on screen here, and I've simplified this a little bit because I want to focus on just a couple items here. Otherwise, we'll get bogged down in a lot of detail and won't get our primary message out. At the bottom is the volume in each of these swings that the market is making. All right, and these signals here, this purple triangle, is analyzing that volume and coming up with an indication that you are done going up or done going down for the moment. All right, now the bars here that are pink indicate that's an order flow signal indicating that I see a lot of selling in that bar. And the bars that are blue are the opposite, indicating I see a lot of buying in that bar. All right, so coming into this week with all the volatility in the NASDAQ, I was going in on wave volume signals and then the break of support or resistance of that after that signal. So I shorted it right there. And in fact, you might be able to see that little triangle right. That's from the actual execution software, showing the location of the trade. There's the exit. You can see I exited way too soon here. There's a reason for that. All right, and then if we just keep going here, this was Thursday, the 21st here. If we just keep going, getting a long signal here, which I have zero interest in given the trend, and then a short signal there, and so I shorted it right there. All right, you get a little bit of a bounce here. Now here's where we get into some interesting discussion, because given the current volatility in the NASDAQ, if you try to trade this with really tight stops, you're generally going to get whacked. All right, it's too volatile. And the plan coming into the week for people that wanted to, that did not want to stand aside, which would be perfectly reasonable, but instead wanted to try to trade it, was to get this signal here, let this break happen, and then try to get in after the pullback. So the pullback happens right there. It doesn't always happen. And then you're going to try to get in, and I say try because the market's moving really fast. You're going to try to get in right when that bar closes down. And that's a way to do this with tighter stops. You have to be very, very quick. And I actually tried to add right here, and it's just moving too fast. I just missed it. And this is why I ended up not getting a bigger piece of this move with this initial entry. I wasn't able to get more contracts in the market. It's too volatile to start off with a big position. All right, so 10 points there. That's 40 ticks, $200 a contract. I shorted it again here. Same thing. I got out right there. Right there. Still too soon again. Another 10 points, very quick, and then it continues going lower here. Yeah, I'm looking at some questions here. At this point, just kind of hold technical questions. We're going to come back and talk about exactly why, that's a signal. Why is that a signal? All right, we're going to answer that question today. This was Thursday. I was not interested in longs, okay, and so I kind of waded through all this, and it's unfortunate because there's some nice trades, especially right here as we break through this sort of obvious resistance. Now, something else too before we continue. I take all these trades live and I record them. All right, so you can see this recording up on the website. I'll show you. I'll point you in that direction so you can see it. But you don't need to kind of take my word for it. All right, it's every day I publish the trades I took, and with commentary. And I try to do live trading so you can see it and especially hear the thought process as you try to manage that trade. So I missed this nice long piece. I shorted it here. All right, so off of this signal here. This is a little ill-advised. I ended up taking a stop right there, just getting nicked. Very, very painful. Very easy to do something foolish after a painful nick like that. And then the market just keeps, this volatility just continues. I got long here after these signals. All right, these signals are saying, hey, get long. And the market, it appeared to have turned, right? It pulled back to the open and advanced. Got out right there. That's a magical exit. 10 points right there. And then what else did I do here? There's a couple more. Nothing through here. And then I was away from the computer. I shorted here. Not the best entry. Exited right there for 10 points. Another 40 ticks. And then I missed this one. Oh, this one's so sweet. I was on the phone. And then there's another one in here somewhere. This is after the pit close in oil. 11:30. Here, I went long here. Again, another case where not the best entry. You really need the big stop there. Exited right there for 10. Another good exit because the market's going to go sideways and then roll over here. And let's see. That was Thursday. Now, I don't want you to think I'm cherry picking this. So what I want to do is just kind of show you my results for this year so far. Understanding the NASDAQ's been really volatile. This is oil. And, 410, 170, 610, 910. So 2100 this first week. In fact, I had a really nice run there in oil. You can see I went 8 full days before I took a loss. 1700 last week, or week before last. And then this past week, Monday was a holiday. Did okay on Tuesday. Wednesday and Thursday was 0. Thursday was disappointing. There was a nice move there I missed. And then yesterday was 500 for 960. NASDAQ, this day here was the wake-up call for me that the approach I was using needed to be adjusted. And so I made some adjustments, and then particularly over the weekend, really started to hit it, get it nicely, 560, 600, 400, 200, 1700 last week. Let's take a quick look at oil. I have one day in oil I want to show you, and then, whoops, that's the wrong one. And then we're going to get back to our presentation. Bob, the current volatility is so high that I'm starting with, this is just one contract, okay? I typically would start, let me go back to the beginning here. I would typically start with a couple contracts here and then do an add. And I'm looking for something like, let me get all this off the screen here. So if this is my entry here, I'm starting with a couple contracts, and I'm really looking for something like this. And I'd like to add right in here. And I've got really good tools to help me see that. In particular, if we just look at this right here, what you'll see is as these pink bars mean there's a lot of selling. So actually, as I'm breaking through this support level here, I can see a lot of selling. So it really makes it really gives me a lot of confidence that the market's going to go that direction. When it's not so volatile, I'm usually trying to get in actually here and then adding there on the break with big selling. It's too volatile now to try to catch pullbacks like that. You end up getting crushed. It's not unusual for the market to just do this and just take off. So typically I would start with a couple contracts and then try to add a couple more and then ride this down better than what you're seeing me do here. One contract, get out for 10 points. One contract, get out for 10 points. I couldn't get the add off here. It was too quick. Same thing here. Here's another case right there. Big selling after this fall. Normally that's a case where you'd like to add something right there. You've got profit in the trade. You add a contract there. In this case, I mean, look at that. That's a full 12 points, 48 ticks off that little peak right there. It's very, very volatile. You're fully expecting this, and you've got to account for that happening. All right. So it's a little. The NASDAQ right now is difficult. All right. So here's something to think about. When you see the range increase like this, you see all this movement in the market. It creates a lot of excitement. All right. And you tend to think that, I should be making more money because there's so much movement. But the reality is that when the range increases like that, the predictability goes down, and it's actually much harder to do well. And so when I look at these results, I go, you know what, I'm doing well here because I'm not getting killed. A lot of people are just getting destroyed in these conditions. Okay, oil's acting much more normal. Right, it's not quite so wacky. So let's just take a look at a typical oil trade. This is from the 19th, and as we come in here, we see here's that wave volume signal indicating, look, I don't see any buying. The buying is done now. It actually peaks out right there. There's a wave volume divergence signal right there. That's what that orange bar is. And so I shorted right in here with 2 contracts and caught this piece down. And then this is a pullback to the open after seeing no more buying interest. Big selling at the open, pull back, and really it's that bar right there that's the first indication that it's going to roll over. And really the pink bar, if you're not already in, big selling after the pullback to the open. This is the time to jump in right there. This caught 50 ticks here. All right. Let's switch over now. We're going to go back to the presentation. So let's hold questions now until I'm done with this piece here. Then we're going to go back and we're going to talk specifically about why is that a signal, and why and how, what does it mean? Okay. From current slide. I get the presentation going again. And so we've done this week's trades. We're going to talk about, what is the blueprint for success? What am I talking about? And then we're going to go back and what is wave volume section here is the technical component. Why is wave volume useful, and what do those signals actually mean? Okay. So let's start with sort of who I am and why I'm here. All right. And I came up through the ranks of corporate America, just like a lot of you, so many others. All right. I was promoted into middle management, and I was in an industry that had pretty brutal business cycles. All right. And I was sort of always concerned about getting caught in one of those just endless series of layoffs. And I was looking for a safety net or a buffer or really just even financial independence. All right. Something to help make sure I could provide for my family. And ultimately, you're looking for security. You like a little bit more control over your own destiny, and not just be subject to these external forces like the economy or your particular industry or the decisions political leaders are making. And trading came to mind as a way to achieve that. All right. So I taught myself how to trade. It took a long time. But I finally figured it out, though not before experiencing extensive pain and suffering at the hands of the markets. Okay. And so in terms of trading pedigree, I'm nobody special. I'm just like you. All right. That's the good news. You don't need to be birthed by your mother on the floor of the exchange and be clinging to your father's pant legs as he's a runner in the pits in order to learn how to trade. All right. You can do it. It does require some. It doesn't require any special trading mojo that's only available to floor traders. Okay, but that doesn't mean that it's easy. Okay, it's not. It's not easy to learn. And it turns out that there's 3 skills that you need to be successful as a trader. 3 separate skills that have to be developed. And the problem is we only focus on one of them, and it happens to be the least important one. We're going to talk about that next, but before we do, let's answer the other question, which is why am I here? Why am I doing this? All right. So a lot of people ask, if you can trade, why do you teach? As if that's, some unsavory thing that you wouldn't want to do unless you had to. All right. Now that question, especially with that tone, is coming from a very skeptical mental space. But it's a hard-earned skepticism. I respect it because I've been there. I understand it. But the answer is simple. I like to teach. It's in my personality. I especially like teaching something that can change your life. And I saw this with the martial arts. I'm a black belt. I was an instructor for many years. And the martial arts has the potential to significantly impact your life. And it is the same thing with trading. Okay. So when I started this, I wanted to provide a complete picture of what you need to succeed, a roadmap or a blueprint that shows how to get from where you're at to where you want to be, and while removing as much of the pain and suffering as possible. All right. To do that, there are 3 skills that you need to develop. 3, not just one. There's 3 skills. And the first skill is by far the most important, and it's related to your biology. Right? You experience a lot when you're trading, and how you respond to what you experience is very, very important to your success. The second skill is a business skill. Now, we all have business skills. We're all smart. We've all worked in businesses, but trading is somewhat unusual as a business. And there's in particular, there's one unique attribute, maybe 2, that you have to be aware of and make sure that you address. Something you don't think about in sort of a normal business. And the third skill is the technical skill of analyzing the market, what we commonly refer to as technical analysis. Now, this is what you think of when you think about trading and you think about learning how to trade, and it's where you focus all of your attention, and that's a problem. because it's only one of 3 skills you need. So you're missing the other 2. And worse, you'll have a biology-based problem or a business-based problem, and you'll try and solve it with a technical solution. And this always fails. All right, so you achieve the best result when you master all of these skills, and you do it in a way where they each complement each other. Okay, so now let's get into some more detail, and we're going to start with biology. This is a lot of people just have not considered this. All right, and so for many people, this is somewhat of a light bulb moment. Mastering your biology is easily the most important thing you have to do to be successful. Okay, and what we mean is that when you place a trade, you're putting money at risk, and your body, it automatically responds to that risk. It's a physiological response. You don't have any control over it. It's autonomous. And what's happening is your body is responding to a threat. And we're most familiar with a kind of threat where someone's trying to harm you. So if someone tries to hit you, your body responds, right? And we call that the fight or flight syndrome. But your body doesn't make a distinction between different kinds of threats. It's not that intelligent, right? If someone's trying to hit you, or maybe your child is about to step out onto a busy street, or even if you just like stumble, you feel your body respond. You feel your body react. Often, this is a survival mechanism. It's very important. A more abstract case would be public speaking. A lot of people are afraid of public speaking. I'm one of them. All right. In this case, your body, it's not responding to a physical threat. It's a threat to your ego or to your social standing, to your reputation. All right. You don't want to look bad. With trading, it's a threat to your livelihood. All right. It's also a threat to your ego for a lot of people. They don't want to be wrong. They perceive a trade that takes a loss as failure, even though that's not necessarily the case, given the environment that you're operating in. You absolutely must deal with this. It is the most important issue. And the reason is that the markets have evolved to take advantage of human nature. They've evolved to take advantage of people who are reacting emotionally, and that reaction is born out of your body's natural biological response to a threat. And the key point here is that this is the exact same physiological mechanism at work in all these different cases. It doesn't matter what kind of threat it is. Your body responds to it, and you'll feel fear, anxiety, doubt, excitement, greed, euphoria. All of these things you feel while you're trading, they're a product of your biology, and they all have to be dealt with. You don't pull the trigger and enter the trade. That's fear of losing money. You exit too soon, fear of giving back profit. Getting excited and chasing a move, that's fear of missing out. Euphoria, right? A feeling that you can just do no wrong now. Get ready to give back all of your profit. All right, this is the major problem that I see very few trading educators addressing, and the rational trader was designed to tackle this issue. Okay, and the epiphany that I had is related to the martial arts. Right? I have a black belt in a Japanese style of karate called Shito-ryu. I was an instructor for many years, and what I saw just one day, my light bulb moment was that when you feel fear when someone's trying to hit you, it is the same fear you feel when you're trading. It's identical. Okay? It is the exact same physiological mechanism. It's in your biology. You can't control that. You can't just turn it off. You can't decide at an intellectual level that you're going to behave differently, and then suddenly your body stops responding that way. It doesn't work like that. Okay? And as soon as I realized this, I knew what I had to do, because this problem we deal with in the martial arts. We have to teach our students, we teach ourselves how to overcome that fear when someone's attacking you. All right? So once I understood that, I knew what I had to do for trading. I knew how to set it up in order to overcome that biological response. All right? And this is a key part of the curriculum at the Rational Trader. Both the formal curriculum, right, and what you see every day in the trading room. You see me do this every single day, live in real time. Okay? In fact, in many ways, the Rational Trader is modeled on how a martial arts dojo is run. Okay. When you're trading, you are in a predator-prey relationship. You're in a competition, and the person you're trading against will take all the money that you give him or her. And until you overcome your biology, you are the prey. This image here would be worth printing out and taping above your monitor to help remind you of who you want to be. Okay, let's talk about business now. You really have to change your mindset when you approach trading. Trading is a business, and you have to treat it like one. It's not a hobby. It's not something that you're dabbling in. It's not something that you're just giving a try. Right? People that say this, or when you say this, or when I say this, what we're doing is we're giving ourselves an advance excuse for failing. And, don't do that. We want to set ourselves up to succeed, not to fail. And when you try and protect yourself from being disappointed, you end up setting yourself up to fail. Right? And the nature of trading makes it very easy to fall into that trap. Because trading is not a normal business. And the techniques and qualities that help you succeed in a normal business are inappropriate for trading. And the thing about trading that is unique from a business perspective is that you're dealing with probabilities. So we have to make decisions about the uncertain future. And in fact, you could say we're trying to predict the future. And it's silly to think that you can do that with any degree of certainty. So our dilemma as humans is we do not intuitively understand probabilities. And to help you internalize that statement, let's look at an example of something that we do intuitively understand, like throwing a ball. Okay? If I throw you a ball, you will automatically catch it. Without thinking, you will measure the trajectory, the velocity, figure out where it's going to be, figure out what precise movements you need to make, and then you'll make those movements and you'll do all of that without thinking, and you'll catch the ball. Now, these are dramatic examples on screen, okay? But if I just tossed you a ball from across the room without even thinking, you're going to catch it most of the time. That's an example of something that you intuitively understand, even though it's very, very complex mathematically speaking. Ballistics are far more complex than probabilities. So let's examine now how that affects us as traders, okay? Here's an example trading program with the parameters of a trading program. Let's say you've got a method where 50% of the time you take a loss. Has to be a small loss or nothing works. 20% of the time you're going to scratch, and 30% of the time you're going to execute a profitable trade. Your risk to reward ratio is on average 1-3. So you're going to risk 100 to make 300, all right? Now, for every 10 trades, what that means, on average, is that you're going to lose $500, 5 trades times minus 100. Twice you're going to scratch, and 3 times you're going to make 300 for a total of $900, all right? So your net amount is $400. This is a profitable trading system. And there are people who have been, trading for a living, using trading approaches that have these parameters for decades. You are going to hate it. You're going to hate it because every time you take a loss, that's pain that you feel, and your biology responds to that pain. Your body responds to that pain. And the biologically driven response to pain is to try and avoid it. And so the first thing you're going to do is try to go fix your trading system to avoid that loss. Or you'll go, this doesn't work, and you'll go try some other technical approach. And when you take losses there, or a loss, you'll go try another one. And you end up visiting all these different trading approaches, all these different technical methods, just like a bumblebee visiting every flower in the garden. But your system's not broken. That's the nature of probabilities. The system's working fine. It's your behavior that's broken. Now, that is not the correct way to state it, because you're not broken. You're responding naturally. You might feel like you're broken, but you're not. Your behavior is born out of that natural response of your biology, the desire to avoid pain. The problem is that behavior is inappropriate to this environment. It's not appropriate to a probabilistic environment, and it's this biological response that you have to master. And again, the rational trader has been designed to address this issue. Now, there's one more thing about business to consider, and I really have 2 points to make here. This is a good representation of the problem that you face, the situation that you're in as a small account trader. You can guess who you are. You are not the big guy. And the first thing to understand or to realize is that you're learning to trade against professionals. They'll take every dollar that you give them. All right, this is the equivalent, if you think about it. This is the equivalent of me trying to learn a martial art, let's say how to protect against someone hitting me in the head, where my training partner is a professional fighter who's trying to knock me out. This makes it very difficult to learn. Now, the second thing to think about is a better representation would be, 10 or 15 of these big sumo wrestlers and hundreds of these little guys. That's more what it's like. And there's 3 combinations of people involved in any one transaction. You either have what you see here, a big guy trading against a little guy. My money's on the big guy. Or you'll have 2 big guys trading against each other, so sort of a clash of the titans, and you'd probably want to stay out of that. Or a bunch of little guys trading against each other. And so when you think about that, who would you rather trade against? One of those big guys or one of the little ones? I would much rather trade against a less skilled trader, a smaller trader. And to the extent that you can find them, that's what you'd like to do. And the charts that you saw earlier, that we're going to get back to in just a moment, are really intended to help you identify what the other traders are doing and find people that have done something foolish so that you can take, that's when you step in and take advantage. The third skill is the technical skill, and this is what you think about when you think about learning to trade. Bar charts, tick charts, oscillators, stochastics, et cetera, et cetera, et cetera. The endless number of indicators that are out there. And this is where you spend most of your effort. On the order of 95% of your time is spent on technical analysis. And I don't want to downplay it. It's important stuff. You need to know this. Okay, but of the 3 skills that you've got to deal with, this is the easiest one to learn. It's far easier than mastering your biology. It's far easier than dealing with probabilities. And the reason that it's easier is that this is just a logical thought process, right? You're smart. This is like a puzzle. This engages the puzzle solving part of your brain, the cognitive functions. Okay. And in fact, we often deceive ourselves into thinking that trading is easy because when you look at a chart, it doesn't look that difficult to figure it out. There's a couple other things that work there because humans are afflicted with something called hindsight bias, where everything looks more probable in hindsight. But nonetheless, when you're just looking at it intellectually, it doesn't seem that hard. But then when you try to do it in real time, you discover that my goodness, this is quite difficult. All right. And it's because these other skills have to be mastered as well. So it's not sufficient to just be a good analyst. The world is filled with people who are excellent analysts, far better than me, in fact, but they can't trade their way out of a closet. Okay, so you can be a spectacular analyst but be a lousy trader. And what will often happen is that if you approach it only technically, you end up trying to solve what is a biology problem or a business problem with a technical solution, and that's just not going to work. It's going to fail. That's like trying to fix a problem with your engine by working on the transmission. Okay? So this is going to segue back to the charts. Okay? So now if you look at this chart here, this doesn't show lots of odd, squiggly lines and that you're kind of used to seeing, and that's because what I'm looking at here is wave volume and order flow. And there's no lagging indicators at all. So now let's go back. We're, how far are we in here? We're 35 minutes into our talk today. Let's go back and look at these charts and these trades I took and what, from a technical perspective, I was seeing. Okay, so if you look at, let me get this off the screen here. If you look at, actually, let me check for questions first, real quick. I like this statement, Gary. Mike Tyson says everyone has a game plan until they get punched in the face. That's very, very true. Yes, Alan, we're about to do it right now. Okay, so this is the oil market from, what day was this? The 19th. And the open's right there, the U.S. Open. And let me go back just a little bit here, okay, so we can see. The London Open was here. And what we can see is, the market advanced. The market advanced here overnight, kind of peaked out right there. And as we came into the 5:30 time when there's sometimes news, we had fallen off. And then the U.S. session opened right here. And I have a signal right there to short. I also have a signal right there. So let's talk about both of those and what are they telling us, okay? Let's do this one first, no interest short, because that's the trade I actually took, and then we'll talk about what that orange bar means. All right, so when you look at the market, the markets move in this ebb and a flow, right? These are the waves we're talking about. All right, the ebb and the flow. And so there's a specific reason it's doing this that's related to the traders that are trading the market. Okay. The people that got long down here, they start to take profit, right? And that's what stalls this. And you had people buying all the way up here, right? All the way up here, all the way up here, all the way up here. Think about the person that bought right there. What is that person thinking? The turn, assuming the turn was down here, let's say, all right? They're clearly well off the turn. They're clearly chasing. So what happens is the people that bought down here, they start to take profit and you kind of run out of steam. And then the people that bought late start to get stopped out. And that's what this is. All right. And so when all that runs out, when you run out of the profit taking and you run out of the people getting stopped out, now right here at this point in time, you discover, are we going to continue this trend or have we turned? And in this case, in my manual example here, we continue higher. Okay. And that just keeps happening. The market's not moving because it wants to. It's not moving because it's not going up because people feel like buying. It's going up because people are getting stopped out. They're getting killed. Almost every single move starts with people getting stopped out. So right here, in my little chart here, right there were people buying all up through here, right? And when we break through here, they start to bail out. And that's what starts this down move. And then people start to pile in. And it just keeps going over and over and over again. So it's the human reaction to what price is doing that is what causes all of this movement. So with that, let's take a look at this signal right here. Okay. If I look at the wave here, these waves down here correspond to these movements. There's actually it's actually like this here. All right. In fact, I can turn that on. Let me turn that on so we can see that a little clear, a little more clearly. Zigzag. Okay. So this is the wave, the way I have it set up. All right. And so down here is the volume in that wave. So what do you see here? I see pretty decent volume on this movement. Not much here. Okay. And then as I broke through here and set a new high, I have this much volume, but you will notice something here. There's a lot less volume in that wave than the previous one. As I made a new high, that's why that is divergence. Okay. You should not have less volume when you're making new highs or new lows. You should have more volume. Then we fall, okay? And it would have here the market did not give me that nice little retest that you often get. That makes it very, very clear that you've topped. You'll get a very clear signal right there when that happens. In this case, it just fell. All right, but we get that here. So a lot of volume. Do you see a lot of volume in this wave? Actually, huge volume, 30,000 contracts on this move down. All right, and then hardly anything. And then once you roll over, it's done, and that's when that signal comes in. All right, so when I get no interest short, it means, look, I don't see any more buying. Where are the buyers? The buyers are gone. We get this signal after we see that the market has reversed. So it can be a little deceptive when you're analyzing the chart after the fact. This signal does not come in until this bar draws, okay? Because you have to see that the market has actually turned. So the entry then is based upon either examining how you're breaking through this level or getting the pullback. In this case, you kind of get both, all right? Because as you're breaking through there, you can see there's really big selling. That pink bar, again, is an order flow signal that says, I see a lot of selling in that bar. There's a lot of sellers stepping in. And look at how easy it is to read that once you understand what that's telling you. There's a lot of selling. I'm not looking at an endless stream of tape reading numbers. There's a bar, it turns pink in real time as we see lots of selling. Even also fairly interesting is that bar right there, which is a lot of buying as you bounce. And look what happens actually as you break through the level that's been set by that bar. Think about this for a minute. Think about the people that bought right there. They're thinking it's a pullback and it's time to get in. So they're probably a little bit more intelligent than the people that were buying up here. We haven't talked about them yet. But nonetheless, what are they going to do when you trade through support? They bail out. Okay. Now, I did not short it here because that's the open. And I won't take trades in the first 5 minutes of the open. So I had to wait for the pullback. This was the 19th. And so what I did here is I actually had placed an order at 49. All right. And then when I got this down bar, so I got filled. When I got the down bar, we didn't even get to the open. I added another contract. That's that second triangle you see. Now, if I didn't get in there, it's very clear right there that this is a good probability to get in, because now I see wave volume short. Where did my buyers go? And the market falls off. It pulls back. It cannot get back through the open, and then it rolls over, and you see big selling. I really like that signal. In fact, I'm sitting here going, I should have added right there. Gosh, I didn't do that. So I'll be thinking about that this weekend when I look at my plan for next week. All right. Let me look at questions. Poll, it's being recorded. You'll be sent a link. Sean, is the volume histogram on the bottom in real time? Yes. As this market is falling, these bars are drawing, and the current one is going up. This is the cumulative volume for the wave is what this is. Okay. The order flow is real time. As this bar is drawing, that's turning pink. As this bar is drawing, that's turning blue. All right. There's a little bit of delay for the actual wave volume signal. That signal, that signal, and that signal. And that's because we have to know the wave has completed before we can analyze the wave volume and understand, do I have a signal? All right, so now let's look at, actually there's some questions. Let me look at the questions. It's a 10-tick range bar chart. Yes, Peter. This is Sierra chart, Stephen. How does one work on mastering your biology? William, I'm going to point you to some information at the end of today's session that will help you get a sense for how to do that, okay? The basic answer is, if you want to master your biology, what you're talking about is retraining your body. Okay, so when you think about biology and fear, there's a lot of activities that we teach people that are dangerous. So we know how to do it. Scuba diving, skydiving, martial arts. All of these things are dangerous activities, but we teach them all the time. All those activities create fear, and you have to deal with that fear, or you're in trouble, right? Scuba diving in particular comes to mind. The armed forces is the other really good example of how, look at how the armed forces deals with training their soldiers to overcome that natural fear. These people are in real danger. Someone's shooting at them, okay? And the answer is, you're dealing with a biological system. The only way to retrain a biological system is repetition. You have to know what to do and then do it over and over and over again. And when you do that, you are teaching yourself at a very deep level that there's nothing to fear here. There is no danger here. So in the dojo, all right, I'm going to teach you this particular technique on how to block someone attacking the face, right? We'll set up an exercise and we'll have someone do that 10 times, right side and left side, and we'll do that with 5 different partners. So you just got 100 repetitions in. Do that 3 times a week, and in a month or two, you're gonna be a master of that particular technique. In trading, it's very difficult to do that because you can't set up that kind of exercise. You got to deal with it live. But the approach is the same. Define what you're supposed to do and then do it. It's very difficult, and that's why you need something like the live trading room. You get to see me do it every single day. All right, and when it's especially helpful when your focus is here instead of on analyzing the market and demonstrating how smart you are. That's not what we're doing. What we're doing is defining what we're going to do and then doing it. Okay, that's how you overcome your biology. That's how you retrain your system. Once you get there, then you're able to take advantage of your experience and your I want to say intuition, but that's not quite the right term. Once you've gotten past the biology issues, you're able to look at the market with a much clearer eye. And so I'll go, you know what? I'm getting a signal to go long, but I think the market's going down, not up. And I'll trust that instinct now. Whereas when you're still dealing with that fear, anxiety, and doubt, you can't trust it because you don't know. Is that conclusion from just years of experience, or is that conclusion because I'm afraid? Okay. We do this every day at the Rational Trader. This is what we do here. Okay. More questions. What about hypnosis? I have no opinion about hypnosis, William. Sure. So we'll talk about stops and targets in a minute, Frank, because managing your risk is the most important thing that you do as a trader. When mechanically defining your risk is the most important thing, and then making sure that you stick to it. Okay. So I have very strict rules that govern how much risk you're allowed to take. And actually, we highly recommend that you externally impose that limit. So a lot of brokers will allow you to set a daily loss limit. And we really, really recommend that you implement that, because you have to define your risk in advance or you should not be trading. And if you know what your risk is in advance, then you know what your maximum loss should be. And you want the broker to liquidate you if you break that rule. That means you're out of control. Okay. Let's talk about this signal here real quick. And how are we doing on time? All right, yeah, so about 10 more minutes here, technically, and then I've got one more thing to share with you. So Hunter's asking, does this apply to stocks? Yes, it does. You're not familiar with futures, that's fine. I actually switched from stocks to futures because I got tired of finding the hot stock out of the zillions that are out there. But the approach that we're talking about here is related to what the traders are doing. You're not trading an instrument, you're trading the other traders. So I'm not trading oil here. I'm trading the other oil traders. That's what I'm doing. Okay. So if you're trading Apple, you're not trading Apple stock. You're trading all of the other traders who are trading Apple. All right. Okay. So when we look at this chart here, what we see is a signal right there. Now, when you break through this high, you should see big buying. You need buying for the market to advance, and you actually do. On the break, that's a perfectly legitimate entry signal right there. You have no interest long. Where are my sellers? I don't have any sellers. Where'd they go? I have a nice set of volume going up. I seem to have run out of sellers, and now I'm breaking through resistance on big buying. There's one other thing to notice here. I'm sorry. There we go. Do you see that bar right there and that one right there? That's big selling. So what happens, again, now think about this. There's a lot of people that sold there and there. What are they going to do when that level breaks? And what are they going to do when that level breaks and you see that there's big buying? It's a very simple concept. These people have to bail out. They're going to get crushed. Okay. Then we kind of run out of steam, right? Because what that says is, well, my wave topped out. I get that signal when this bar finishes drawing. So at this point in time, I can see that this wave is done, and this is my volume. And when I look at that, when I look at that volume, too many lines, so hold on. When I look at this volume here, and I compare it to that one, there's less volume. There should not be less volume if I'm making new highs. There should be more. So the advance is now suspect. Now, we don't get a clean signal here, unfortunately. It tries to do it right there. We need a little bit more to see that we're testing that high and that this is not just a pullback to go higher, all right? It doesn't quite give it to us this time, so it didn't set up. That's life. You could consider something quite risky right there. The reason it's so risky is you're 50 ticks off the turn, all right? And you're fully expecting, if the market's going down now, you're fully expecting this, all right? And you have to account for that happening. All right? This is one of the things that makes trading with a small account so difficult, is that you've got to figure out, do I need to be aggressive and go after it, or should I wait for that pullback? It's really the same question right here. Here I'm showing, look, I formally tried to go higher and failed, and now I've got no interest short. All right, there was a lot of buying right there in that big blue buying bar. Okay, and then when I broke through that, that's it. If you'll notice, the market never comes back to that level. These people that bought here bail out, big selling out on the open, a pullback. This is all it can muster, and off it goes. Okay. I trade oil and NASDAQ live in the room. And I was trading bonds, but when NASDAQ got so crazy, it required more focus. So I set that aside. But I'm bringing bonds back here fairly soon, I think. I'd like to add either gold or the euro. and we'll see. You have to make sure that you're giving the market enough attention so that you don't miss anything. You don't want to spread yourself too thin. Looking at questions here, Scott, the room's open it's open 3 hours a day. Okay, so from just before the oil market opens, so 5:45 a.m. Pacific to 8:45 Pacific. David, David is asking how many of these analytical tools are proprietary or custom. The order flow and the wave volume are custom. You cannot do this using native tools. I tried. All right, so I had to write this in C++. Okay, this is Sierra Chart. They're written for Sierra Chart. That's what I support right now. I am planning on extending support to another platform this year, but no promises. It kind of depends on how things go and how much time I have. I ignore news events. I do not look at the news. I do not watch the news. I just don't trade during the news. All right, so that's what this line is. That's a blackout period, no trades during news. All right, I'd have the software draw this automatically. There may or may not have been news that day, but there usually is news at 10 o'clock Eastern, so I just black it out and then check on my on the web to see if there's news that day. Thinkorswim is a great platform for options, but it's not that good for futures. If you want to trade futures, then I suggest switching to a different platform. Scott, I have a lot of members that use Ninja. I get that request a lot. It's why it's at the top of the list for potential support next, but I don't support it now. The members that run Ninja, they either watch my charts or they just run Sierra Chart in parallel. And one of the great things about Sierra is that it has a very small computing footprint, and it's not a resource hog. I ran Sierra Chart and TradeStation in parallel for years. I actually run NinjaTrader in parallel with Sierra Chart right now. I use an enhanced DOM that's built on NinjaTrader. Other questions? Let's see. Okay, so let's see. Frank was asking about risk. You know, what's the risk? So let's look at this. Let's look at the Nasdaq, because that's a better place to talk about risk and how to deal with it. So typically with the Nasdaq, I will trade with 10 or 20 tick stops. Typically, I prefer 20. I don't like getting nicked, and the tighter you get, the more likely just a random wiggle will get you. All right. So I would normally start with 2 contracts with a 20 tick stop, and I take one off at either 4 points or 5 points, 16 or 20 ticks, and then let the other one go. I'm typically aiming for 10 points, which is 40 ticks, or 20 points, which is 80 ticks. That's what I'm normally doing. In the current conditions, it's too volatile to do that, so I kept the risk the same by cutting my size in half and doubling the stop. All right, so these results, this is what happens when you try to go too tight. These results are recognizing the volatility in the market and reducing my size and increasing my stop. Now, some people can't do that. You don't have a big enough account. If you're only able to trade one contract already, then you can't reduce your size anymore, so what do you do? The smart thing is to simply stand aside. All right. If the market is this volatile, then you shouldn't be trading it. Okay. This is the equivalent of you're in your little sailboat out in the ocean, and there's a hurricane. You're going to sink and die. All right. So get to shore. The alternative is what we talked about in the room is that, look, you can't really take this on the break with a tight stop, but you can try and catch the pullback. All right. You got to be quick, or you can't do it. You're just going to have to wait until things settle back down. It will. It's not going to be like this forever. It'll be like this for 3 or 4 weeks probably, and then it'll settle back down and go back to normal. All right, so typically then I'm aiming for a 10 or 20 point run in the Nasdaq. That's kind of the bread and butter trade that you'll get, and then it'll start thrashing sideways and get ugly. And I'm using either a 10 or a 20 points, 10 or a 20 tick stop, and I'm trying to add. So I don't start off with a full position. I start off with 2 contracts, and I'll add depending upon how the market behaves. I like adding like right there on big selling if I'm short. That's a great signal. I'm here. It was a little too late. I was already out. Okay. Questions here. Let me see. So Harold, a $6,000 account is a very typical small account starting size. So when if you join the Rational Trader, you'll look at the business plan, and it'll very clearly defines for you how much risk you can take, and you just kind of back into what does that mean on the instrument you want to trade. Okay. What's the yellow bar at 640? Oh, this is failure to push. This is another wave volume signal that says, look, I got very close to the low on big volume, but I couldn't push through it. So that's the third basic wave volume signal. Divergence, which is right there. No interest, which is right there. And then failure to push right there. Okay. How many trades do you typically take in a day? Not that many. 2 to 5 per market. Okay. When you look at a chart here, let's go back and look at oil, and then we're gonna have to change topics here in just a moment. But when you look at here, if you look here, here's the morning session. There aren't that many good entries here. So if you're taking 10 trades, what are you doing? That's crazy. There's not, if you look at this chart, there's a couple of good places to enter. All right, there, if you can figure it out, there's a long in here somewhere. There's a reasonable short here. There's also a reasonable long there, and that's about it. Okay. The pink here is the London close. The session's about to end. All right. So look at your chart and see where were the good entries. How many were there? There's not going to be 10 or 15. Okay. So if you're taking that many trades, then you have a biology issue you need to address. Divergence, no interest, and failure to push was that third signal, Bill. So if you look at the way the market behaves at the edges, at the highs and lows, so right there, that's failure to push. Because the high of the session is right there. Do you see that? The high is right there. And so if I have good volume, I should be pushing through that high, but I failed to do so. So that's failure to push. The opposite is when I actually push through the high. Right here, I pushed through the high. The high at the time was right, well, it's a little bit higher. It was right there, but I don't do it on very good volume. That's the opposite. That's divergence. So I push through on low volume, or I fail to push on big volume. Both of those are turn signals. Okay. All right. Let's go back now and start talking about the Rational Trader as a service, and what do I have to offer that might be able to help you. The key thing here is to understand that you've got 3 skills you've got to master. The technical skill, which is probably where you've been spending most of your time, and the mastery of your biology, which is by far the most difficult thing to deal with, especially if you don't realize that you need to do something there. And then understanding that trading is a business. Sean's got a question here. Let me go back and answer that real quick. It looks like you trade mostly off just cumulative volume. No, I'm only showing you this because we don't have a lot of time today. This is the real chart. And all of these signals here are related to the order flow. Okay, and so you put these two together, wave volume and then order flow. I was only showing you big selling and big buying in the bar, okay? But wave volume is very good to give you a direction, okay? If you just use wave volume for direction, you'll be pleased with the result. I would be. There are times when, like right here, I'm not getting a wave volume signal here anymore. You got to use order flow to figure out that entry. All right, let's get back here now. And what are we? We're an hour in. Yeah. Okay, so we need to wrap up here. So the rational trader is built to address all three of these issues: the technical, the biological, and the business. And they're all done holistically, in that the technical approach it sort of implements the philosophy related to biology. So think about this for a moment. If you take nothing else away from today, take this. If you are struggling with fear, anxiety, and doubt, if you're struggling with your biology, consider every other market participant is also. And so if you can find those people, they're the ones you want to trade against. And that's what we're doing with these charts. Look at the big buying, but then the market doesn't go up. Look at the people that are buying the highs, but there's no volume. These are the people you want to trade against. Look at the people that are chasing the move. Those are the ones you want to get. All right. And so when we look at what they're, sort of what's available, let's start at the top and work down. Okay, so that the trading room is everything that you see here. Okay, so let me make this clear. If you join the Rational Trader, the live trade, and you subscribe to the live trading room, everything that you see here comes with that price. There is no hidden cost. There's no extra thing you're going to have to buy. So this is something that just drove me crazy when I was learning, is that I would see something that I liked, and I'd sign up for that service, and then I would discover, oh my gosh, I've got to spend $1,000 on indicators to get my charts to look like that. It's not like that. You pay one price and that's it. There's no more. There's no new tutorials you're not going to be charged for. The indicators, the custom indicators, come with the membership. There's not some new product I'm gonna throw at you next month or next week that you absolutely must buy. I don't do that. There's one price, period. Okay. So when you there is a quarterly and a monthly rate for the trading room. So for 3 months it's $597. $597 per quarter. That's 20% off the monthly rate. The monthly rate is $247. Okay. And again, it includes everything. All right. The reason it's set up the way it is, all right, so the monthly is down here at the bottom, it's $247 a month. This is a 20% discount if you go quarterly. And I did that on purpose. It's not because I'm trying to soak you for as much cash as I can get. It's because if you make a commitment to an approach, you're going to be more successful than if you enter something with the mindset that you're just trying it out. Okay. Again, don't be the bumblebee that's visiting every flower in the garden. Commit to an approach and stick with it. All right. Here's another way to think about it. All right. If I want to learn to defend myself, and I go and I spend a couple of weeks at a Japanese style dojo, and then I go out and I get in a fight and I get my clock cleaned. That doesn't work. So then I go and I spend a month at a Taekwondo studio, Korean style karate. And then I go get in a fight and I get white and I get knocked out. And then I go join Kung Fu, et cetera, et cetera, et cetera. That's what happens when you're sort of flitting from technical approach to technical approach. Make a commitment. And in 3 months, you will be a different trader than you are today, especially if you're focusing on your biology and you're focusing on trading as a business, and you come into the trading room and it's not just Shane calling out trades. It's daily practical trading lessons. This is the trading equivalent of going to the dojo every day for 3 hours. Okay. Now, the next thing that you could purchase would be the Wave Volume Trading Program. Okay. This is $197. And what it is, let's just jump over to the website and let me show you. It's right here. That's the daily videos. Here. The wave volume trading program, you would get access to this page, all right? And what this does here is, this is an introduction on how to read everything here. This is the tutorial on using wave volume. Here's a tutorial on order flow. And then actually down at the bottom here in the corner is an extra tutorial that integrates those two together. All right, this is a total of 4 hours of training right there. Then there's a tutorial on using order flow to enter on the break. All right, so when we talked here about, you get that signal there, we can use the order flow in a very specific way to find if that is a more probable break, or is it more likely a head fake, right? In fact, you can set the breakout, and then you'll get these arrows. You can see here. Actually, let me keep this out of the way. By setting the breakout, you can see I'm getting this pink arrow right there. It's actually 1 bar sooner than the big selling you see there. So there's a simplified way to use wave volume and order flow it'll get you into the market using wave volume and using order flow with a set of rules that's not so complicated that you're not sure what to do, and it lets you practice your biology. When I get this signal, I do this thing, and if it indicates I should enter, then I enter, and here are the rules. Okay, it's as mechanical as I can get it, and what it does is it allows you to demonstrate to yourself that you can follow that set of rules, and this is how you work on your biology. Your job is not to make money. Your job is to follow those rules. It'll be hard because you won't believe the market's going up or down, or you'll be afraid you're going to lose money. But your job is to overcome that fear, and the only way to do it is to trade. Okay, you're not going to learn to trade from a book. You've got to actually trade, and you're not going to learn to trade on a simulator. On a simulator, you're not engaging your biology. It's not real. All right? Use the simulator only as long as it takes you to understand what you're supposed to do technically. And as soon as you do, implement the business risk rules and start trading with real money and get your biology engaged so that you can overcome that. You can overcome that fear. You can master your biology. So the Wave Volume Trading Program, $197, provides for you the custom study that implements these signals. So you can see the wave volume and provides the custom study that shows you in the order flow that I want to go in on that break. Okay, that's what the wave volume does for you, the wave volume program. Everything you need is here. All right, here's the tutorial on using entering on the break. This is information on if you want to set up a chart that's not in the template. This is a reference for the two custom studies. This is written for Sierra Chart. Here's the downloads. I want to jump to here in just a moment, okay, and show you what's in the downloads. And then here are the installation instructions, okay. If you're installing it, if you already have Sierra Chart and you've used it before and you're installing it, you would just use these wave volume instructions. But if you're new to Sierra Chart, then you just go to here and you get a very complete set of instructions on how to get set up. Okay, so everything you need. Let's look at the download package for a moment, because there's something here I want to show you in particular. Because in addition to the tutorials and the custom studies and everything you need to sort of understand what to do technically, this also comes with the Rational Trader Business Plan. And this is where, in my opinion, this is the most important thing that you do as a trader. Go through the business plan. It's a 5-page document. It talks about risk and capital allocation and setting goals, setting realistic goals, and sort of ways. Make sure that you're setting goals that are achievable. All right. Work on one thing. Achieve that goal, work on the next thing, achieve that goal, et cetera, et cetera, et cetera. This is how you can make incremental improvement. Instead of trying one massive goal, you're going to be this incredible trader that is, that goal's out of reach. You want to don't set milestones that are so far away that you get disillusioned. The other thing that a lot of people really like here is the glossary this comes with. It shows the signals, and especially at the beginning, it's very good. It's very useful to reference what all this stuff means. Okay, so here's the no interest short, looks at the wave volume and identifies declining interest. Okay, the last thing I have to offer you is I'm going to find it now, I really am, is an introduction to wave volume tutorial. Okay, this is $19.95, and it is similar. You're going to get access to this page here, Introduction to Wave Volume. And what you have here is a tutorial on wave volume. Then there's a tutorial on order flow. All right, and what I do every day is I use wave volume to help understand direction and order flow to find an entry. Okay, and then this is using them both together. All right, so there's a little bit more than an hour on exactly what is wave volume. It takes kind of what we talked about earlier and expands upon it in depth. Introduction to order flow. You've probably heard order flow discussed in the past, but maybe weren't necessarily sure what it was. By the time you finish this tutorial, you will know exactly what order flow is. I have been told that this is the clearest explanation of order flow that people have ever heard. Okay, you will know what it is when you're done here. You'll also know how I'm using it. I'm using it in a fairly unique way, and that's how we're identifying big buying and big selling in a bar that you saw earlier. This is putting the two together. This is 2 hours long. It's okay. Now let's take this information on wave volume and order flow. Let's look at the real charts and see how you would actually use this. What's the practical application? Okay, this is not just theory. All right. Again, I do this every day in the room, so we're not, I do what I teach. I also have some live trading examples that happen to be from the days when I did this tutorial. Okay, this is $19.95, very inexpensive. I've been told that this tutorial is the best training people have had, period, paid or otherwise. So this is the idea here is for a very small amount of money, you can get some real value in how to look at the market, and from there, you may decide then to continue your relationship with the rational trader and come join the trading room. All right, now let's look at other questions here. Do you get the 197 features do you get the wave volume trading program if you sign up for the trading room? Yes. The trading room has everything. If you join the trading room, there are no other costs. You get everything, okay? It is possible that, I'm sorry, that the questions are scrolling by a little too quick. Let me see if I can stop this. How long do you think it takes a novice to master the system, biology, business, and technical? Paul, this is a great question. Thank you for asking it. I talk about learning cycles of 100 trades. Okay, so set yourself a goal that you're going to take 100 trades and you're going to execute to your plan 100 times. All right. And if you have followed the rules about risk, especially an externally imposed control on your loss. Okay, so if I say I'm going to take 2% risk per trade, and I'll allow myself 2 losses in a day, that's 4%. All right. I want to call my broker and tell him, look, if I exceed 4%, so that'll work out to whatever, $200. If I exceed $200, I want you to shut me down for the day. That's the best way to do this, because that will prevent you from destroying yourself. All right. Now, some brokers have that, others don't. Like the broker that I use, Infinity Futures, they have what's called a daily risk limit. You call them up and you tell them, I don't want to take more than $200 loss a day, set my limit at $230, and their systems will kick in if you exceed your loss. And this is a way to force yourself to follow that rule. It's really easy to get out of control. It really is. There's nobody else. This is one of the problems with trading is that it's just you and your computer. There's nobody else there. I'm not there. I can't reach through the internet and slap you when you're about to do something foolish. You've got to control yourself, and it's very, very challenging when you're dealing with these natural responses to what you're experiencing in the market. All right, so if you take 2 trades a day, that's 10 trades a week. All right, that's about 3 months to get 100 trades. All right. Commit to 3 months, and you will be surprised at how different a trader you are 3 months from now if you commit to an approach that's complete like this: biology, business, technical. All right. And your goal, you're not trying to make money. You're learning, okay? You're learning. You're in school. Your goal, execute those 100 trades according to your plan. You've got the risk set up so that you're protected. You're not going to destroy yourself. So my goal is to teach you to trade without losing all your money in the process. That's my goal. All right? Think about it. If you went to university to learn Java programming, you're not going to make money Java programming while you're learning how to do it, especially if you're competing against professional Java programmers. Of course not. And yet for trading, we seem to think that, yeah, I'm going to make a lot of money. You got to change your mindset. You're not going to turn a profit. You're going to learn. You're going to learn how to trade. You're going to learn how to read the market, and you're going to learn how to manage your risk, and you're going to learn to master your biology. That's what we do every day at The Rational Trader, okay? Same thing, Joe. If you join the trading room, you do not pay anything else, period, all right? You get everything. There's no extra cost. There's no hidden costs. I understand the reason for the question because that's not the way everyone else operates, but that's what I do. I'm not going to surprise you with more costs later. You don't have to pay anything else, okay? Okay, so can one purchase the software for use after leaving the trading room? So Paul, the idea here is if I have to charge you up front for, to kind of recoup the cost of the development of the custom studies, then you have to charge you a lot of money like everybody else does. So I'm not doing that, right? I'm not saying, hey, pay me $2,500 for these awesome custom studies and come join me, all right? But that cost does have to be recouped. And so the way it works is I don't want to tie you to me forever. You need to become an independent trader. But there's a business reality related to development costs of custom studies. And so how it works is if you join the room, you're paying your monthly or quarterly subscription fee, and you get everything that I'm using. And if you're with me for a year, then the license for the use of the custom studies converts to lifetime. So if you're in the room for a year, it's yours for life. Okay, that's how I deal with that. Do you ever trade the ES? No, I don't. I did. The ES is a terrible instrument for a new trader. Okay, the best traders in the world are trading the ES. Who do you want to trade against? If you're playing basketball, who do you want to play against? Do you want to play against LeBron, or do you want to play against the local high school team? The ES is a tough instrument to trade. It has the most speculative traps. It also has there's only 4 ticks per point. And so it can be harder to get the fill that you want. The Dow or the NASDAQ are better instruments than the ES, in my opinion. Dow is fine. I trade the NASDAQ because I asked my members and they voted and they said, let's do the NASDAQ. So that's why I do the NASDAQ. Other questions? Steven's asking, he's new to futures, what should I do? And the answer is, buy the Wave Volume tutorial. We're talking $20. This is nothing. And you'll get a very clear understanding of what we're doing here. The other thing you can do, Steven, is on the site, this is The Rational Trader, Go and subscribe to the daily videos. Every day you'll get the video that I publish. So again, these results you saw here earlier that I showed, you don't have to take my word for it. There's a video that supports these gains. I publish it every day. And so you'll get that video every day. And it's the trades I took. It's often live, including commentary, and including biology-based commentary, okay? Now, the other thing you can do, Stephen, is go and watch this video. What are futures and why trade them? In the Information for Success menu, okay? And I think that'll help answer your question. It's also kind of entertaining, I think. I'm a master sim trader. I do great sim and then I go live and get killed. David, welcome to the club. Everyone is like that, okay? And it's because on the simulator, your biology is not engaged, okay? You've got to engage your biology, and as soon as you do, since you're not prepared for it, you get destroyed because that skill has to be developed, okay? So come join the Rational Trader. We'll take care of that problem. That's what we do. Bill's talking about, does this work for some longer time frames? Wave volume absolutely is helpful for longer time frames. You will be surprised if you watch this video and then go look at your daily charts. You will not want to look at them without the wave volume in the future. Okay, there is so much information there, so concisely represented that I can't look at it now without it. Thank you, Davey. I'm looking at questions, and then we're going to hang it up here. Let me see. Okay, so Sean's asking, are those results from just the trades you took in the 3 hours? Typically, yes, but the NASDAQ has been active enough that I've gone ahead and looked at it in the session between like the last 2 hours. So typically it's just 3 hours. Like oil, yeah, this is all just the first 3 hours. I don't trade oil after 9 o'clock Pacific. In the NASDAQ, most of this was the morning. This particular day, it was so active, I just kept trading. And so here's what I do, Sean. If I'm going to continue to trade, since my expertise is in the morning, I'll continue to take trades until I take a loss, and then I stop. If I'm going to do that, okay. All right, so let's just wrap it up here. Thank you for your time. I really appreciate you taking the time out of your schedules to listen to me. The live trading room, $5.97 a quarter. Make the commitment for 3 months, and you will be a different trader 3 months from now. Wave volume trading program, $197. A way to add wave volume to your trading, and a way to do it in as unambiguous a way as possible to allow you to work on your biology. Okay, Introduction to Wave Volume tutorial, $19.95. An incredible value really for what you're getting. Over 4 hours of training on wave volume and order flow. A very, very good deal. I think if you have any questions, don't hesitate to simply send me a message here at, okay, eventually I'm going to get the right thing here. There we go. info@therationaltrader.com, or you can just use the contact form off the website. I can't emphasize to you enough how important it is to factor in your biology, your physiology when you're trading. All right? If you take to heart the warnings and the teachings of the Rational Trader, you can, if you've been trading and failing, you can stop the bleeding and get on a path to success if you start focusing on technical analysis and biology and business, all three together. All right. If you're new to trading, you have the opportunity to avoid a lot of pain and heartache by really taking to heart the teachings of the Rational Trader. Okay, that's it for today, gang. Thank you very much for your time. And A recording will be published in a few hours. Take care and have a great day.